So one of the questions I want to address is everybody's been asking me, what are the best time frames to trade? You got to look in the mirror and say to yourself, what kind of trader do you want to be? Do you want to be a scalp trader, day trader like I've been my whole career? Again, this August 1st, I'll be trading for 37 years. Do you want to be an intermediate term trader, a long-term trader, right? But for me, scalp and day trading is what I've been doing for, like I said, for almost 37 years. And that's something I love to do, right? And so when you look at scalp and day trading, it's important to look at time frames, various different time frames. I can't just trade off of one particular time frame. And as I mentioned, I trade off the 5 and the 15 minute. The 15 gives me the direction, and then the smaller time frames give me the ability to buy and sell within that trend, to pick up positive, negative divergences. When I look at the index futures, I look at the 3 minute, the 5, the 15, and the 30, and the hourly. So I look at 5 time frames. It's important because the indexes, for me, really will tell me which way the markets are going. And so I want to be ahead of that. I could pick up a 5-minute sell divergence on the S&Ps, and they can drop 15 handles, and I know that sell signal, and I can see Microsoft, Apple, Facebook, all the big cap stocks dropping with it. So I'm able to identify using the indexes with 5 various different time frames, where I look at the equities and ETFs with the 5 and the 15-minute time frame. So it's really important not to just look at one particular time frame. So my research has shown me in all the years I've been trading that you need to have multiple time frames. If you look at any one of my screens here and my charts, I walk in, I have the same symbols on these screens day in and day out, and I have multiple time frames. In the left hand corner I'll have the 15-minute time frame, and then on the right I'll have the 5-minute time frame. So I'll split the screen with the 15 and the 5. The 15-minute time frame will help me, using my predictive analytics, give me market direction, and then using the smaller time frame will be for me to enter short positions and or long positions using the time frames, the smaller time frames. It's not just where I could just look at a 1-minute time frame all day long. About a couple of years back, I walked into a prop trading room and I saw a guy trading, and he had 1-minute bars up and like 40 different charts, and I just couldn't, I had a migraine. I didn't even know what he was looking at. Number one, I couldn't tell if he knew which way market direction was going. So again, using my predictive analytics, my research has shown me you need multiple time frames to trade, especially if you want to scalp and day trade the markets. Even if you want to trade intermediate and or long term, I look at the long term, the daily and the weekly. Intermediate, I'll look at, like, for example, the 360-minute with the daily on intermediate time frame. So it's important to look at multiple time frames when you trade. So depending on the style of trading, and my style is day trading, scalp and day trading, normally when I enter a trade, the trades last anywhere from 1 to 6, 1 to 8 bars. So if you're looking at a 5-minute bar, it's anywhere from 1 minute to 30 to 40 minutes. Just so, for example, we just saw a position on the S&Ps drop from the 01 3/4 down to the 86 level. So within practically 15 minutes, the S&Ps dropped 15, 16 handles from high to low. So again, depending on the trade, normally the trades last anywhere from 1 to 6, 1 to 8 bars. And if you're on a 3-minute time frame, again, anywhere from 1 to 6 bars, so anywhere from 18 minutes to 24 minutes. Yeah, so my risk reward is basically is always stops in place. Preservation of capital and discipline, as you know, my 5 key words are super important to me, is consistency. Every single day, you need consistency. You need to have discipline. You need to have the confidence. Right? The confidence. I'm giving predictive analytics, and I'm teaching people to be on the right side of the market, to identify the trends, the reversals, the patterns that constantly repeat themselves. And then you look at the passion, and then you have to be patient for the trades to really set up. And that's what I teach all day long. Those 5 key words: identifying trends, reversals, and positive and negative divergences using my predictive analytics. So if you want to find out more about my live trading room, my chat room, look at www.tickertocker.com. Go in, see my profile, Stephen Kalayjian, or you can go on Ticker Tocker TV every single day, and Ticker Tocker TV runs 24 hours. It's free. I'm on every single day live from 11:15 to 12:15 or 2:45 to 3:15 every single day. Constantly replay the day's activity, my webinars, and all my activity throughout the day.
The risk of loss in trading commodity interest can be substantial. You should therefore carefully consider whether such trading is suitable for you in light of your financial condition and considering whether to trade or to authorize someone else to trade for you. Past performance is not necessarily indicative of future results.